In the last video, we have learned couple of problems on capital and revenue items. In this video, we learn what is receipt and payment account and how to solve the problems on it. Now, first of all, when we talk about receipt and payment account, remember a basic receipt and payment account is a cash account. Cash means what? An asset. So in any transaction, this way, the transactions will be given. In any transaction, if you find out that cash comes in means what? Cash balance will increase in the assets. We debit. If you find that we have paid cash for any purpose, salary paid, rent paid, any expenditure paid, cash goes out. Cash goes out means our cash balance will decrease in cash balance. We credit. A very simple concept. If cash comes in, we'll debit cash. If cash goes out, we'll credit cash. This is English system. I repeat once. Receipts, cash comes in. Payment, cash goes out. American accounting system, increase in cash, we debit. Decrease in cash, we credit. Let us take up one full problem and see how this is to be solved. In receipt and payment account, whether the item is capital or revenue, immaterial. Wherever cash flows in or out, that is to be entered in the account, irrespective whether it is capital or revenue in nature. Capital revenue bifurcation we need when we prepare income and expenditure account, not a receipt and payment account. Let's see the first transaction. This is the problem. Cash in hand, 10,000. Opening cash. Right now, there is no cash balance shown. Last year's cash, when we carry forward this year, your cash account will increase. Increase in cash is increase in assets. We debit. Cash in hand. With the amount of rupees 10,000. Next transaction. Subscriptions received for previous year 16-17, current year 17-18, next year received in advance 18-19. We are not concerned of which year we are receiving. We are concerned with what? Cash flows in. Yes, that is to be entered in the receipt and payment account. How much total subscriptions we have received? 1,30,000. So cash balance will increase by 1,30,000. Increase in cash, increase in assets, we debit. Let us debit that. Subscriptions. With the total of 1,30,000. Next transaction. Salaries paid rupees 10,000. When we pay salary, cash comes in or cash goes out? Cash goes out. Cash goes out means that is decrease in cash balance. Decrease in cash balance, we credit. It's a payment, we credit. On the credit side. Salaries paid rupees 10,000. So this way we can use the American accounting system or one simple part. If cash comes in, it's a receipt on the receipt side. If cash goes out, it's a payment. Based on this concept, also we can complete the problem. Let's see. Sale of old newspaper. When we sell the newspapers, cash comes in. Whenever we sell anything, we receive the cash. Cash comes in is a receipt. Receipt on the receipt side. Sale of old newspapers. Amount 500. Next transaction. Furniture purchase 30,000. When you purchase furniture comes in, cash goes out. Cash goes out means that is a payment. We'll record it as a payment. Furniture. What is the amount of furniture purchased? 30,000. Cash balance decreases by 30,000. Legacies received. Cash comes in. Whenever we receive something, cash comes in. It's a receipt. Let us enter it as a receipt. Legacies received are 1 lakh. As I said, whether the item is a capital or revenue item, not concerned in receipt and payment account. What we should see is where cash comes in and cash goes out. Let's see. Printing and stationery, it's an expenditure. Printing and stationery means we have paid 1,000. When we pay 1,000, cash flows out. It's a payment on the payment side. Printing and stationery. The amount comes to rupees 1,000. Next transaction. Repairs and renewals 5,000. Again, it's an expenditure. Expenditure, cash never comes in, cash goes out. That is a payment. Repairs and renewals. Rupees 5,000. Next transaction. Honorarium paid, nothing but remuneration paid to a surgeon or any other managerial person. We pay that, honorarium is paid. So cash comes in or cash goes out? Cash goes out. Cash goes out, it's a payment. Payment on the payment side. Honorarium. The amount 15,000. Next. Interest on investment. Investment is asset. Like the deposit what we keep in the bank, that's our investment. It's asset. On the asset, when there is interest, that cannot be an expenditure, that has to be your income. Because when we keep the money in the bank, we receive the interest from the bank. Similarly, whatever are the investments that the business has made, on that business will receive the interest. Receive the interest, it's a income. Cash comes in. Cash comes in, it's a receipt. Interest on investments. Rupees 1,000. Next, rent paid. Rent paid. Cash goes out. Cash goes out, it's a payment. We'll record it on the payment side. Rent. The amount of rent paid is 5,000 rupees. One last. Telephone charges. Again, we have to pay the telephone charges as expenditure. When you pay the telephone charges, cash goes out. Cash goes out, it's a payment. Telephone charges rupees 500. That's all. This is how we prepare the account. Now let us balance it. The way usually we balance the account, in the same way we are going to balance it. Check out which side total is more. Receipt side total is more. So first see how much is the total. The total of the debit side comes to 2,41,500. The total which is greater we write on both the sides. Now from this receipts of 241,500, let us minus the payments. 10, 31, 5, 15, 5, 6, that is 5. 66,500. So when you minus it, the balance what you get is 1,75,000. We show it as balance carried down, or we can show it as closing cash. This is how we prepare receipt and payment account. Now let us take up one more problem on this receipt and payment account. So let us see the second problem. This is problem 4. From the following, again we need to prepare the receipt and payment account for the year 17-18. Cash in hand. Cash in hand. Right now there is no cash balance shown. So when you show cash in hand, your cash account will increase in cash. We debit either as cash in hand like the last problem, or we can also take it as balance brought down rupees 15,000. Next, subscription received. Received means cash comes in. Cash comes in, it's a receipt. Subscriptions received rupees 50,000. The next, endowment fund received. Again, it's a donation received. Endowment fund received 1 lakh. We'll record full 1 lakh in the account. We cannot use full 1 lakh at a time. Of that endowment fund, we should use a certain portion every year. But when we receive that, show it as a receipt. Full 1 lakh rupees. Endowment fund. It's a receipt on the receipt side. Amount 1 lakh rupees. Salaries and wages. It's an expenditure. We pay it. That means it's a payment. Cash flows out. We'll show it as a payment. Salaries and wages. Amount rupees 15,000. Next. Electricity charges. Again, expenditure. Expenditure is nothing but a payment. Payment on the credit side. Electricity charges. The amount rupees 5,000. Sale of old materials. When we sell the materials, cash comes in. When we sell anything, cash flows in. Cash comes in, it's a receipt. We'll show it as a receipt. Sale of old materials, rupees 6,000. Next, government security purchase. Invested the amount in government security. When you purchase the government security, cash goes out. It's a purchase. Cash goes out, it's a payment. Payment on the credit side. Government securities with the amount of rupees 80,000. Interest on bank balance. We have bank balance. The non-trading organization has a bank balance from which they are receiving the interest. Interest received is a receipt. Cash comes in, show it as a receipt. Interest on bank balance. Rupees 1,000. Next, plant purchased. We purchase plant. What goes out? Cash. It's a payment on the payment side. Plant purchased worth rupees 30,000. Postage and telegram, it's an expenditure. Tournament expenses is an expenditure. Office expenses is also an expenditure. So all three are expenses. In all the three cases, cash goes out. All three will show it as payment. Here, first, postage and telegram. So here, postage and telegram, tournament expenses and office expenses. This is what the three items we have recorded. Now, we have finished entering all the transactions. Let us balance it. See which side total is more. Receipt is more. 15, 50, 1 lakh, 6,000 and 1,000. 1,72,000. The total which is more on the both the sides. Credit side total 15 plus 5 plus 80 plus 30 plus 6 plus 5 plus 1. 1,42,000 is this total. 172 minus 1,42,000. What we get is 30,000. We show it as balance carried down. This is what is receipt and payment account. In this video, we have learned what is receipt and payment account and how to prepare it. In the next video, we learn how to prepare income and expenditure account. Thank you.